Today, Fed Chair Jerome Powell said that he is happy with the considerable progress on inflation. He says he feels like there's progress. Have prices gone down? No. But he still feels pretty good about it. But is the federal government giving us the full picture of the economy, especially in this election year? Well, yesterday I spoke with one of my favorite online personalities, Economist Professor Peter St. Onge, and he is one of my daily go-tos that gives it to us straight about what is happening in the economy. And he says that the real picture shows not only that we're in a recession, but possibly a depression. Watch. So some of the things you've been warning in your channel is that we are already in a recession, and a lot of the federally released economic numbers are usually some kind of perversion that don't tell the whole story. So why don't you give it to us straight? Are we in a recession, and are these numbers a perversion?
Yeah, this is the big question. So I think, 10 years ago, you were basically crazy if you were questioning government numbers. I mean, nobody with a PhD would do that. They would make fun of you at the PhD clubhouse. You wouldn't get invited to parties. And I think a lot of that changed starting really during Obama, to be honest, when the media sort of threw off the mask of objectivity. The Obama administration seemed to play along. They sort of tweaked the numbers a lot more than previous administrations. And you can measure this indirectly because you can just look at revisions after the fact, right? So when new economic statistics come out, that's when they really get the media spotlight. That's when relatively low information voters make up their minds. So after the fact, if those revisions are all going one way, then this starts to raise suspicions. And Zero Hedge has been on that, to their credit, for a very long time, going through the revisions. But anyway, that really ramped up during Obama and then going into COVID. And now under Joe Biden, it's just an epidemic. And so that means that we really kind of don't know what's going on with the economy. It's almost like every economic report that comes out is sort of a new puzzle, and you get to figure out what they lied about, like what they're covering up. So, if you look at generally when it comes to the economy, there are three big numbers that matter, which are inflation, the growth rate, and jobs. Okay, those are the three numbers that they get the most public attention. If you are sort of expecting shenanigans, that's where you would spot them. And if you go through those numbers, all of them have huge problems, right? If you take inflation, for example, allegedly since pre-COVID, we've had 21% inflation. So anybody who lives in this economy, that is comical, right? I mean, houses are up, 30% plus. Fast food menus, okay, these are a long-standing metric used in, foreign exchange markets, that number in the trillions. They look at the so-called Big Mac index, right? Anybody who reads the Economist magazine, for example, is going to be familiar with this. What it basically does is equalizes the prices of Big Macs across countries, and this gives you an indicator what's going on with the currency. And the Big Mac is useful because it has a range of inputs, right? You have some workers, you have some real estate, you have some trucks, some ingredients, and so on. And so Big Mac prices, more broadly fast food prices, those are actually up 35 to 50%. Right. Wow. And then, of course, you can keep going. Right. You can look at people posting.
Can we put a ballpark on that? Like pre-COVID, a Big Mac would be $3.50, and now it seems like it's $5.50. Is that around accurate?
Yeah. Right. Exactly.
Yeah. Yep. That's a lot.
And right. And, of course, it gets worse. I mean, people post online. They post receipts, maybe families, for example, they've been buying the exact same thing for years. And they just post a receipt from a couple of years ago. Maybe they find it when they're, cleaning up, and they compare that to today. And there was one guy who just did that. He went back. You can actually try this at home. If you go back on Amazon, they keep track of all your orders. So you can go back and find an order that you placed like 2 years ago, and you can just say, rebuy this. Okay. Yeah. And it'll give you the pricing on it. So this guy did that, and it was something like $120 2 years ago. Now it's like $400.
Right.
Okay, so 21%, there's something wrong with this picture. And the reason that matters is that So since COVID, we've had relatively slow growth when you average out all of the years. But that's if inflation was 21%, we've had slow growth, right? If inflation was actually 35%, even being conservative with all these other shadow indicators, if inflation was 35%, then we've actually been in a recession for 5 years now. If inflation was 50%, then we've been in something more like a depression. Now, this is going to, I think, strike people as crazy. It struck me as crazy when it was Jeff Tucker over at Brownstone that first sort of surfaced the question to me. But the thing is, if you look back through history, inflationary depressions are relatively hard to see. Okay, so, and the reason is because your assets go up. Assets capitalize future inflation. So when the inflation is going up, your assets jump before your Big Macs jump. Okay, and so people tend to focus on that. They have more money, they're spending more. So you saw that in Weimar Germany, for example, where in the early stages of the hyperinflation, people were not upset about rising prices. Prices were going up, yes. They weren't talking about that. They were talking about the amazing stock market returns, okay, because stocks soared, housing soared, every asset soared. So in an inflationary depression, you get this world where all assets just go through the roof, and then the prices slowly catch up with those. So I think that describes fairly accurately what we're going through now, right? Between houses soaring, stocks going up, Bitcoin, crypto, everything. They were calling it the everything bubble during COVID, and which was weird because we were in the middle of the worst recession since the 1930s. It was government engineered, but it was a horrible recession, yet everything was going up in price. It's kind of weird. So that obscures the fact. And so at this point, I think as an economist, that's really the question is, I generally take the government numbers as they are. I understand there's little caveats. They don't count people out of the labor force. There are all these little sort of tweaks that they try and put lipstick on that pig. But sort of in the back of my mind, I take the government numbers as they are. So, for example, if somebody asked me how's the economy doing right now, I would say, well, we're in pretty slow growth. But if that inflation number is key, if the inflation number is dramatically being miscounted, then the way that growth works is that you have growth in the economy, and then they knock inflation off that. Okay, and that gives you so-called real growth. So if inflation is much higher than we think it is, then actually we may have been in a recession for going on 5 years now, which would make it the worst, certainly since the 1970s.
I mean, it feels like that, right? And so one of the things I like about your channel is that I understand the mechanisms that are happening that explain what I am experiencing. Whereas when I watch the media, it feels like a gaslighting situation. You may know I was a reporter for CNBC, and it very much felt like we were supposed to repeat whatever the government was telling us. I remember I was reading, do you know the economist Harry Dent? I was reading his book and speaking about this, on the set in commercial breaks, and people were laughing at me. Other reporters like, oh, come on, we're not supposed to be paying attention to that doom and gloom type thing. But what you're saying is that we have an insolvent government that is engineering bad times for us. And it makes, I understand exactly what you're saying. One of the things you warned about last week was government jobs, that we're now growing government jobs, not private jobs, gig economy, we are growing that. And so that's bad because it puts us on par, you said, with the Soviet Union. Can you explain why that's bad?
Yeah, so if you take the most recent job report, even on the official numbers, right? We're not questioning anything yet. We're not going to crazy town. On the official numbers, over 1/3 of new jobs last month were government jobs. Right. And, even in like Yugoslavia during, when the Soviet Union was still in business, there were a significant number of private sector jobs. So, I mean, we are really not very far from communism when you get to a point where 1/3 of your jobs are formed by the government. And beyond that, of course, so keep in mind, that's 1/3 of the headline number. But actually, what was interesting about this job report, this is just a couple of days ago, is that they said we created 200,000 jobs, of which 70,000 were government jobs, but they also revised away 100,000 jobs from previous reports. So that goes into that sort of gaslighting where all the revisions somehow magically become negative when the media is not watching anymore. So strictly speaking, we only actually had 100,000 net new jobs. We had 70,000 government jobs. So this is starting to get freaky. Like, that's a very high number. And, of course, government jobs are permanent parasites. I mean, these are not people who will be producing things. These are people who will be consuming things. In fact, depending what the government job is, it could be extremely parasitic. Like, if those 70,000 people are new EPA bureaucrats who are going to be, measuring the carbon footprint of, some mom and pop restaurant, I mean, these people are like, they're professional job killers at that point. And so 70,000 new government workers could imply many times more of that in, sort of private sector jobs that are hunted to extinction.
Yikes. Okay. Well, I could talk a blue streak about all of this, and I always love your analysis, but I'll get you out of here on one more question. One of the things that I really appreciate your analysis on is what happens to our taxes and the economy in the event of an election. So what do you think then is going to happen to this economy in the event of a Trump win, which is what the polls currently are indicating?
Yeah, Trump has great instincts on taxes. He generally wants them lower. He has a lot of concern for people on the lower end. Really, there are two groups that, if we look at Trump version 1.0, there are two groups that he was interested in cutting taxes. One of them was poor people or working class people. He regards those people as his base. He regards them as the people that he, brought him to the dance. So he wants to take care of those. And the other group that he tries to take care of is business taxes, because he knows enough economics that the businesses are the ones who are creating the jobs, are the ones who are creating the prosperity. I don't like big business any more than anybody else on the populist right. I have no love for them. But the truth of the fact is that if you have very low taxes, especially on small business, but anyway, the corporate tax, if that's very low, then it encourages production, right? The alternative, if you are taxing production, then you are going to have rich people who take their money and go buy yachts rather than, say, creating a factory. Okay, so Trump understands both of those. I think that he's going to keep pushing on those. On the other hand, Biden, of course, or whoever's running Biden, I think at this point, everybody agrees at last that Biden is not actually controlling anything. So there's somebody who's running the country. The media seems stunningly incurious about who exactly those people are. But at any rate, if they win again, then, right, they've been pretty clear on what they want here, which is that 1/3 government worker. That's what they want. All right. They want to suck society's resources into the government. First, you do it with deficits, and then you sort of hold the economy up as a human shield. You say, look, we got all this debt. Wall Street's going to collapse. We'll have Depression 2.0. So you got to give us more taxes. It's very cute, right? It's this ratchet effect. They spend more, especially buying votes, things like, the college debt handouts, and then they come back and get more taxes. Somehow the taxes are never enough. They manage to outgrow the taxes every single time. So, I imagine if Biden comes in, we get that kind of a ratchet.
Yeah, exactly. I was reading Thomas Sowell's book this weekend, and he talks about how inflation is a regressive tax paid by the lower class. And that's exactly what we're seeing right now. So thank you so much for coming on Redacted for the first time. I hope it's not the last time. I'm really a big fan of your show. Again, you can follow Professor Peter St. Onge. Let me just make sure I have it right at Prof. St. Onge. So thanks again for your time.
Thanks for having me on, Natalie.